Welcome back, everybody. It's the same day, 3rd of July, 2021. It's currently 9 p.m. of Saturday night. The third and last session of backtesting for today is my day off. Um, I I then managed to study and to do backtesting a lot more than I can usually do during the week or when I have my shifts as a full-time job. So we were here. So this morning, 10th of September 2012, we were expecting price to drop and to do a pullback after the last week's NFP. We were expecting at least to go to this level, to the key level 1731.5, or even to expect a further down retest and pullback after this very 450 pips bullish aggressive candles to end the week. We were expecting at least this level. We might get a rejection at 1723.5. We're currently on 1728 price. Of course, now the day is getting bearish. You don't see because there's a trend line that is printed, and is currently already we are in the New York session. So this morning, as you can see with the history, we took three attempts of sells, and you see that the price actually followed my analysis, but my execution wasn't on point. I still have to, I tend to buy at the top or sell at the exact bottom. You see, sell, price goes up, sell, goes up, sell, goes up. I still have to fix my my execution. My analysis was on point from this morning, expecting this pullback. What is not on point is the execution. That's why we are here. So we are going to really go through New York session and see if we have a rejection or reaction at 1723.5 key level or what. Okay, now we are on a 5-minute chart. Let's go back on the 1 minute to see a bigger picture. We see looks like we are reacting and we are going to retest the level. Retest the rejection. Actually, it was not easy to spot an entry since the trend is clear, but there is really whipsawing, ranging a lot. There's no clear trend like with impulsive candles, or even here. It's really tough. Look like this. Let's go through London close in 1 hour and 2 hours. Now we are seeing a reaction and a rejection. Price was not able to break above. Exactly. On the 1 minute, it was created an order block. Now we see huge break of the key level. Looks like we are retesting the top of the order block to further continue up. Remember, this is the previous lows of the order block, and actually got rejected. Huge rejection of price at the top of the range, which was the previous lows of the order block. So we might say that this was a break and retest of the order block. We see now if price continues down or where it wants to go. 1 hour and 20 till London close. This is not an ideal situation to look for trades, in my opinion. It's too choppy to ranging and too unnecessarily stressful to blindly stare at this chart. Tomorrow we don't have big data. Remember, we have the FOMC on the 13th of this week, so Thursday. So we might even expect some sort of ranging consolidation or the block between levels before having the speech directly from the Fed regarding the following monetary policy ideas, or what they want to do, the statement. Looks like we are making sort of bullish correction phase of this bearish trend. These are not hourly candle that you want to play within. So we are going to London close. We see a reaction of this at the still not able to break above exactly the lows of the order blocks, these lows, which might give an idea to that buyers are not strong enough to push price up, but instead they might go and retest 1723. London is closed, now it's only New York volume, and we're going to jump through and go to the next day, which is Tuesday. There we are. So as you can see, okay, let's go to pre-London. Tac, perfect. Okay, what do we see on the hourly time frame? We see exactly that during Asian session, during the end of New York, this was the end of New York, we had the continuation down after the rejection of the order block. So as I was saying a few minutes ago, many rejections of these lows of the order block. The trend line was sort of respect, and it went to further many pips. Went from here was 85 pips. This was a clear, much clear 50 pips of action, and it went almost to retest the key level. So we can say that the pullback played out as we were expecting. We draw the trend line from the morning. We're expecting a pullback to this key level or even further. We managed to get to this further, and now it looks like we are in a bullish trend, a pullback with weak hourly candles. Of course, it's Asian session, so we don't expect a lot of action, a lot of volume. We got another reaction at the order block lows many times. Now we got a new higher low created, and now the price in pre-London is trying to see and react at these previous highs. So what is the outlook for today? Today we have the trade balance in a few hours, expecting it to be negative, more negative than prior. What do we see? Okay, so we are, as I was saying, we are reacting at the key levels, we are reacting at the previous resistance. We are still going to play within the key levels and the price technicals, because the fundamentals, they are not. We are very bullish for gold because of the NFP data, but we're waiting for in 2 days for the FOMC press conference, which will be able to define the further actions, the further tools that the Fed wants to develop and wants to use to further help the economic growth. So it's going to be 11th, and we are going to see what's going to happen. What are we expecting? Either ranging between these levels, since we don't have any clear path yet. Where are we? Here. Okay. This is the 4-hourly candle. You see clear pullback to the key level, and now it's going up. And either we can go and even retest and maybe break this previous highs. I'm not expecting to really break it strongly before the FOMC, but let's see. We will see how it plays out at the key levels. So we are going on the 5-minute, and we are going to start with the London session. We are seeing a rejection on the previous highs. We are seeing a sort of order block creating. Now we are looking at a rejection, double rejection at the key level. Let's see if price can't really push further up. We might see a retest and revisit of these previous lows. But don't forget that we are in a bullish. All the sellers are currently in a counter trend trades. So it looks like we are closing out on the key level, creating a sort of a wedge. Let's see if we have any trading opportunity. It might be above these previous highs or below these lows. Okay, looks like buyers are not being able to push the price up. Let's see if there's a squeeze happening here in this flag pattern. As you can see, higher lows, lower highs. Okay, looks like it's going to push up. Reaction at the key level, and bam, it was a fake out. Now it's going below and back in the range. Let's see if it breaks below this level, the previous lows. Instead, no, looks like it wants to range. As you can see, this is choppy, really choppy. You don't want to play and fight the range. You want to play with the confirmation. Okay, looks like price managed to break above really impulsively here. Something that maybe, let's see if in real time is something that you can spot. Makes a lower week. We're not yet above these previous highs. We're now in real time, so the price is moving in real time. Okay, let's see if we can see an impulsive candles above this level. Okay. Looks like the impulse was there, so the possibility to enter and as an impulsive with an impulsive entry was there. Let's see now it's reacting at this usual low on the block lows. We see a first rejection. Let's see if we retest these previous highs to continue up, or it gets back into the range, or even does just a small pullback. Okay, looks like we are testing the previous highs, as I said. And going back to the range. And retesting the key level. I sort of pause here because I was wondering if a buy was a good choice, but with only 15 pips, so range was not something you want to play with. But I say that we go directly to Thursday, the 13th. I don't want to play in this range for that much. As you can see, we are just ranging. I don't want to waste my time. Let's see the 13th. Okay, so we managed yesterday to break above the key level. Let's see if on the 5 minutes there was some. So we broke, we were choppy. We are last reaction at the key level. This one looks like some reaction at the news, but there was no news. So probably there was some headline that ended up creating these around the 30 pips whipsaw, because you can see that the price then fell and got instantly corrected. And I assume that this was some headline that we don't have access to. Let's go to London as always. Okay, so today we have the PPI, producer price index, so the inflation for the producers, and unemployment claims at 12:30, which we will jump to. Okay, look, this is London session. How hopeful this is. Why? Because we have in 4 hours we have the FOMC conference. So I want to see now in half an hour the PPI, which is expected higher than previous, and more unemployment claims, which are not good news for gold, for dollar. So let's go and jump to. Okay, so we see some liquidity grab. They are expecting bad news for gold, as I said. Okay, tack. So what do we have here? We see much higher producer price index and much higher unemployment claims. So what I am expecting is, let's go on the hourly time frame, a push from gold until at least this level, to react to this bad news. Because what are they expecting the Fed to say after For the inflation, the Fed has been very optimistic. Unemployment claims higher than expected is not positive for the U.S. economy. Okay, they are not ready yet for the tapering, for the interest rate hikes. So I'm expecting price to of gold maybe just a little bit of last stop and then go up. Instead, it looks like they don't even care. And we are back into the range. Probably this was the pricing in, but it's just 30 pips. So we're going to the actual FOMC Federal Open Market Committee, which is in boom. Okay, which is now okay. Okie dokie. What is this? Okay. So there was surely some headlines that we missed prior to the conference. For the statement was okay. So why the price is going down? Bullish for USD, bearish for a dollar. Let's go. I will pause for a second and we'll go and see the statement. There we are with the FOMC statement from September 13, 2012. So what did they say? Okay, they have the committee met in August. The symposium suggests that economic activity has continued to expand at a moderate pace in recent months. Growth in employment has been slow, and the unemployment rate remains elevated. These are the points that the Fed were looking for. We're looking very with a lot of attention to, as I said, start tapering or not. Housing sector, inflation has been subdued, although the price of some key commodities have increased recently. Longer term inflation expectation have remained stable. Okay, so this is the positive for the investors. Okay, inflation is not the problem. What is the problem? The growth in employment, and the unemployment rate is 8.5 was, or 8.1 is too much. They want 6.5 or less. They want the 6 to foster maximum employment and price stability. The committee is concerned that without further policy accommodation, economic growth might not be strong enough to generate sustained improvement in labor market conditions. Furthermore, strains in global financial economic outlook. They are positive and optimistic with the inflation. To support a strong economic recovery and to help ensure the inflation over time is at the rate most consistent with its dual mandate. The committee agreed today to increase policy accommodation by purchasing additional agency mortgage-backed securities at a pace of 40 billions per month. They are not tapering. They are continuing the quantitative easing. They want to still stimulate the economy, injecting money into the economy. Already during the press conference, these words probably already managed to make go grab liquidity 100 pips lower, and then we see the actual news, the actual move from gold, because these, as you know, quantitative easing are really is being delayed. The tapering talks are being delayed. Quantitative easing is being continued. So it's as a short-term bullish catalyst for gold. We'll increase the holdings. They will watch they will continue watching the employment data. So what are we doing now? We saw the liquidity grab. We are going to buy above this level. So we are going to put, we saw the data, we interpreted, and we put a buy stop at 100 pips. So over there. Stop loss, I don't like it. Let's, I will put it 30 pips. Oh, okay. So we saw the, oops, okay. We saw the statement, we read it, and now we got a huge gap. Let's see. I don't even know if it got activated. Nope. I don't care, but okay. In real time, you would have got activated here already, like 100 pips of profit. Let's enter here. We buy. We are expecting price to whipsaw us. Really nice. Okay. And we have the, I couldn't enter properly. And we have the press conference in an hour and a half. Of course, we don't have the headlines to play with, but as you can see, the gold is being really bullish as expected. Okay, let's go to the end of the day. Okay, we have the press conference. We don't know what they said during the press conference, so we're going to Friday morning where we have the CPI data. Okay, as I said, we have this whipsaw. We saw it. The data feed is not properly done during this event, during this FOMC statement, but we saw a whipsaw liquidity grab to 1715 key level, and then we saw an upward push of like 400 pips from this level where I wanted to enter, like 410 pips. And we analyzed this statement to understand why gold gained this bullish momentum. So for today, I'm done. I'm not going to see the Friday, the CPI, we will see it another day. I'm not, as you can see, I struggle a lot with entries, execution. So it's really difficult for me to